Welcome to the Secrets of College Planning. I'm your host, Anthony Uva, and today we're going to get some insight in some financial needs for college at the college level. My guests today are from Wells Fargo, and they are Craig Ader. He's the Marketing Relations Manager for Education Financial Services, and Andy Kim. He's the District Manager for Community Banking. And welcome to the show.
Hello, Anthony.
Yeah, no problem. So usually I start my guests where they went to college. So where did you go to school?
Sure, I can go first, yeah. So I went to Rutgers University, and I am the youngest of 3 children to go to Rutgers. I didn't follow the path of my brothers that studied engineering and environmental science, but I studied economics.
Okay, great. And yourself?
I'm actually a non-traditional student. I didn't go to college till I was 24. I was an adult student, and so I was from the Midwest, so I went to University of Wisconsin-Oshkosh for my undergrad,
Sure.
and then did graduate work at Marquette University in Milwaukee when I was working there.
Wow, fantastic. So let's just go back in time. How did you pick the schools? What was the process that you went through to pick the schools?
Sure. So for me, it was pretty easy. Rutgers was, like I said, I was the youngest of 3 children to go to Rutgers, and it was a state school. When we first came to the United States, Rutgers was kind of the dream for us. We wanted to go to the state school, and we've always had, in our local churches, a lot of families that had their children attend Rutgers. So that was kind of predetermined for me. But going into the field that I wanted to, it just seemed like it was a right fit, and then I'm familiar with the community, so it was good for me.
Great.
Yeah.
And yourself?
In my case, it had to be driving distance from my employer, since I was working full-time, going to school full-time, and the state school was within about 18 miles from my employer, so I could drive there, go to school, and then get back in time to go to work in the evening. So that made the decision for me.
Okay, that's easy enough.
Yeah, it was.
So you're at college, you're about to graduate. How do you go from college to Wells Fargo? What was the path that you took?
So I had an interesting story. I was recruited with Wells Fargo out of Rutgers. I attended a career fair my junior year, and at the time I was working with another company completely out of the industry. I wanted to have an internship more in the line of what I was graduating or studying. So I attended a career fair, and by chance I met one of our Wells Fargo recruiters, and the rest is kind of history from there.
Wow. And how long have you been with Wells Fargo?
I celebrate my 10th year this year, actually.
Wow, fantastic.
And I was actually recruited as an intern, and then as part of a rotational assignment, they had me support different offices, learning different lines of work, and here I am today.
Great. Yeah. And yourself, Craig?
Mine was a little different. I came out of college the last time the market retreated in 1987. And so interviewed for some financial positions, and there just wasn't a lot of brokers and advisors who were unemployed. Mm-hmm. So I ended up working at a small liberal arts college in central Wisconsin.
Wow.
And then from there ended up taking a job with another school in Milwaukee, Marquette University, and I ended up in enrollment management at the university. And so from there was recruited to work from one of our legacy, Norwest Bank, which then became Wells Fargo. And I have been with Wells Fargo now 20 years.
Wow, fantastic. Congratulations from both of you.
Yeah.
Yeah, fantastic. So college. Students going to college. The burden is about tuition and the amounts of tuition. How do students go about saving money for college? What's the process that someone would take?
You want me to start?
Sure, yeah.
Well, of course, when we look at these, we often speak to the whole family situation because it's not just the student. And so when they receive funds, whatever those sources from, if they can be disciplined enough to put part away towards college, obviously you're a student, you're young, you want to spend a little bit on yourself.
Yeah.
But to establish an account. And then Andy be better at speaking about the 529 plans that the family can get into. They can have relatives contribute into, all that sort of thing. But discipline is the key. The more money you put away prior to that first class in college, the better off you are because you can take less loan.
Gotcha.
Yeah, I'd agree. I think to your point, Craig, it really is discipline, right? And that's something that we try to instill with our customers, those type of savings behaviors early, right? And whether that be through 529 college savings plans or even your regular checking or savings account, that what we see is mom and dad or family members holding for the children, it really does create some discipline around personal finance, saving, because the idea of college savings can be a little bit overwhelming, right?
Yeah.
So really, we always promote the idea of early start, right discipline, right practices, and really following guidance of whether it's your advisor, your local banker. But starting early is very important, and ensuring that the parents have a good understanding of how that works as well really helps develop some good banking behaviors with children.
So now if a student is 16, 17 years old, goes to work for the first time, what should that student be doing with their paycheck? How do they go about saving money?
And that's where it starts, right? So, we find that our children, our minors, typically, the extent of their banking really will be the check that they receive from grandma or grandpa. But at the age of 15, 16, 17, that's where we find that our students are saving, they're making deposits. And what we find typically at that age, the best way to really help them guide that portion or that part of their life is helping with personal finance. And we do that with let's say, our teen checking. We have accounts that are designed really for parent and child, so that parents can oversee some of that banking, right? They can help monitor how the spending is happening. Of course, we offer services like direct deposit. But along with that, we really try to educate the parent as much as we do with the children to really help create more oversight and really shape some of those banking behaviors early.
Okay.
Yep.
Anything to add to that?
No, it's all about, just thinking about it. If you're planning to go to college and you're thinking you're going to need money, which most people do, of course, on the saving side, it's not all going to be scholarships, so put away what you can put away.
So that brings up a question on scholarships and things. Some schools have scholarships for sports and academics and things of that sort, but it's usually not the full tuition of the school. Is there anything that the students can do at Wells Fargo or any institute to help them along with some of the other things that they might get from the school?
Absolutely. Late sophomore year, early junior year, they need to start looking at what scholarships are available. We support a scholarship search engine. There are numerous out there, but we happen to support one. And the one that we support has over 7 million scholarships that it searches across for a potential spend of $41 billion.
And how does that work? How does that system work?
The student goes in and puts in their own personal data and their family data, might be family history, some achievement or award they've received, and it scans all that past those scholarships.
Wow.
And of course, the Scholarship Foundation set up their own criteria, so you never know what's going to trigger a response, and it comes back with a listing of potential scholarships.
So how many can someone actually get if they just put in their stuff? What's the average that someone usually gets?
I don't know that, to be honest with you, Anthony. And it's going to vary a lot based on the criteria.
Could be from 1 to whatever.
Whatever. I mean, because the list could be very, very long. And if that's the case, when I'm talking to families, I suggest they take a look and see which ones they think they have the better chance of receiving. Because obviously you've got to download the application, complete it, and return it by a deadline. So, that's why starting late sophomore, early junior year, it gives them time to get those applications pulled together and completed.
Yeah.
And scholarship money, as we all know, is the best form to pay for college because it's not coming out of the family's pocket.
Now, I've had people on from Wells Fargo before. One of the things that comes up was it's not always the first choice to go to an institute. Where do they go first? What's the first choice that parents should be going to? Not just the banking institute. That should be their last resort. Am I correct in saying
For financing?
Yeah.
On our side, my side of what we do is all about advice and guidance. And so our whole mantra is compare and choose. So collect all of your options and then make a decision. It may be, if it's financing wise, the bank that's the best option. Might be a federal program. You don't know until you have all the data, which is why it's key to start early.
But it's on the parents' point of view. If there was some place where they could go and find out everything all at one time, that's the key to this whole thing. Is there anything out there that's like that?
We try very hard. with our advice and guidance model, there are calculators, there are starting points. We have a website, Get College Ready, and all of that directs families into various niches on what they may be looking for, whether it's searching for a scholarship or looking what financing's available, all of that, and that is a single point for us.
So how about students for summer programs? Is there things that students can do work-wise in the summer? Is there something where they can make extra savings somewhere? How can a student save even more money than just a regular part-time job, I guess?
Yeah, it really, I think, starts from, that's a really good question. It really starts to that discipline, and essentially, the accounts and services we provide for parent and for teen, they're designed to help allocate those additional dollars, because what we find typically is, the savings, the funds that come in will typically deplete quickly, right?
Yeah.
And that's one of the biggest challenges we find with college students that are opening their accounts for the first time. Whatever money they're getting from mom and dad, or any additional funds they're getting from, let's say, financial aid or student loans, that money typically goes very, very quickly.
Yeah.
So one of the benefits that we found in working with parents and really helping guide some of those savings decisions, savings practices, is that we start that very early through what do we call our Way to Save program. And again, it's a way for our students to create that discipline early, right? And then, when it comes to college, we have offers where they can receive direct deposit and so forth. Yeah.
So how about the amount? I'm a high school student. I'm working 20 hours a week. I'm probably making $200 a week. Out of that $200, what am I saving out of that? Can I put $10 away, or do I have to put my whole paycheck away?
And of course, that's going to vary by the need, right? But what we always find is the budgeting is number one. Budgeting is number one, because oftentimes when you're going to school, you're transitioning from living with mom and dad, now you're in school. Budgeting is number one, is where it starts. Because again, you'll find in the beginning of a semester, at the end of a semester, a lot of our students receive, and I received it myself when I was at Rutgers, some of the returns on some of the student loans. So
Yeah.
that money is usually typically assigned for books and so forth,
Right.
books and dormitory and food costs. But in my experience, I've seen those funds go very quickly. So what we have at Wells Fargo that's really designed to help support and help better manage that is a budgeting calculator. We have a lot of different services through our mobile banking, balance alerts that help our students keep track of their spending, number one.
Yeah.
And then to answer your question around how much, it really depends on the need of the individual, right? If they're paying for their own rent, or is that cut out of their tuition?
Yeah.
A lot of those decisions, while there's not one formula to fit everything, it really is something that should be taught by and guided by the parents.
So is it something that parents can learn in the high schools? Is there a financial night that the high schools do? Do banks actually go to those type of things, or is it just colleges that would go?
Yeah, Anthony, part of what I do is I partner with those high school guidance counselors, as do many of my colleagues, and we go out and do seminars all fall.
Yeah.
And the whole timetable for seniors in high school has moved forward this year because of the change in when they complete the financial aid form.
Yeah.
So this is getting to be real compacted. Almost every other night during the week, sometimes we're doing sessions around the state.
Wow.
And yes, they're available, they're out there. Some, of course, are more frequent in certain areas than others, depending on how large a guidance office is, et cetera, and how many staff they have. But they can get the information they need if they're available to go to those and ask the questions.
Yeah. So going to those particular nights, what can they learn at those events?
Well, there's usually tables set up with various participants to ask questions at outside of the event, but the school itself usually sets up a session on preparing and paying for college. Sometimes even all the way through, how do you do an admissions application?
Really?
And they have someone from the local community there to assist them.
Yeah, Wells Fargo is very active in all levels of education, right? When it relates to community and our commitment to serving our local communities, we on the bank side do a lot of sessions around financial literacy, and that could be from as early as elementary school all the way through high school and college.
Wow.
So we really tailor those education sessions based on really the audience. But we will cover everything from credit, establishing credit, building credit, to personal finance, how to budget. What is credit, right? What is good credit? How do you maintain good credit?
Yeah. Well, that's a good question. What is credit? What is good credit for a family
Sure.
to do that?
So credit essentially is your trustworthiness to repay however much you're going to borrow, right? One of the things that we find typically with a lot of the younger students that go into college, this is their first taste of freedom. So their extent or their exposure to banking, like I said, would just be whatever grandma or grandpa cut the checks for. You stick your money into a savings account. But one of the challenges then is that when they turn 18, that money's theirs, and really without that guidance of how to spend the money, we find that oftentimes without that right guidance, mistakes happen, right? And credit is one of those things where we find that our customers that maybe have graduated college may have made some poor decisions in college and are now paying for it after the fact. So when it comes to refinancing school loans, when it comes to purchasing their first vehicle or even the home, they're at a disadvantage because they haven't properly maintained credit.
Right.
So what we do is we explain what credit is. And just like I said earlier, it's you demonstrating your ability to pay, essentially, right? But that in and of itself doesn't necessarily build a pathway for credit. It really is important to understand the different dynamics, how to maintain good credit, how to repair it if you've made some mistakes.
Yeah.
And that's something that we do very well at the bank, and we take great deal of pride of educating our customers with.
Now, does the student have to have some type of credit, or a lot of these kids don't have jobs, or is it all just based on mom and dad?
Depends on the product, I guess.
Sure.
In my realm, because they don't have credit, quite often if they want a private loan from the bank to supplement what they're receiving from the school, they're going to need a cosigner. Because, like you said, they just simply don't have the credit necessary, and they're most likely not full-time employed while they're going to college.
Right.
So they need to bring a cosigner to the table to get the loan. More so in recent years than previous.
Well,
Yeah, my student loans were all co-signed by my parents. Sure.
okay.
Now, outside of that realm, when you're looking at other credit, right, or other forms of credit, whether that be a credit card or a loan, line of credit, auto loans, that will look at, we'll look closely at more spending habits. And of course, when we think about our younger students, because of the lack of credit history, it does become a little more challenging for them, which is why we always encourage the parents to get involved, right? Get involved early. You want to demonstrate to the bank that you have a relationship, right? You want to demonstrate that you have a good standing relationship. And those are all things that contribute to whether or not, or how much, that student could be eligible for. Yeah.
Now, what do you find as, the name of the show is Secrets of College Planning. So secret is really the biggest thing. Where do you find where parents go wrong? What's the secret that maybe someone always misses?
I can start.
Yeah, go ahead.
One of the things that I've observed, even in my own journey of student financing, is it's extremely important that parent and child or student know very, very clearly the types of loans that they're taking out. Because when you think about student loans, it's not just a federal loan that you could be applying for. It could be a state loan, a private loan, subsidized, and so on and so forth, right? And some of the pitfalls when you're taking out that many different forms of credit is that maybe you can't consolidate the two, right? There's different types of loans that can't be consolidated into another. So really providing a good education, good foundation understanding of how the different lines of credit work or different types of loans work is important, because as they are continuing, we know that most undergraduate students tend to look at postgraduate work, and we want to make sure that, of course, that their credit doesn't get damaged along the way. So
Right.
understanding how and what their rights are, right? What their rights are as a borrower, and how they can consolidate those loans later on in life become very, very important. And that's something that I think many parents mistake, yeah, sure. And most importantly, the borrower ends up learning the hard way in many cases, if not properly educated.
Anything to add on that?
Well, and from my realm, in my world, it's to start early so you get those general questions answered early, and then you can get to and not miss the detailed questions that pop up. Because if you don't have your general understanding of what questions to ask,
Yeah.
you can't ask the right question. And so don't wait until you're a senior in high school to start the process.
Yeah.
Start earlier than that.
And so families are trying to save as early as kids being born these days. With college costs anywhere from $30,000 to $60,000, $70,000 a year, and so on. What do you think you can tell some of these families? What's the fastest way to save as much money as possible to do that?
Yeah, I think, like I said, when you think of the task of saving for college, that could be overwhelming. So sometimes that fear itself prevents us from getting an early start, like Craig mentioned. At Wells Fargo, we have many different ways of saving, right? I think when your general audience thinks of savings, they're thinking of your passbook account. You're thinking of the account that you're putting money in, you're getting stamped, and that's. And while that's still a traditional way of saving, there are far more options, right? So whether we have our financial advisor partners that specialize in student financing with a 529 plan, there's Coverdell programs. In addition to that, you have systematic savings, you have custodial savings accounts that are designed to really get an early start. The idea really is to know what your options are. That's really the most important thing, and really working with an advisor or working with your local bank to create a plan, right? Because when the plan starts early, that's really when we find the stress levels come down, right?
Yeah.
And that's really the idea behind going to your local branch or local bank and really helping strategize.
And I always hear about families always taking out home equity loans. They're always, doing that to just go and give it to the kids for college. What do you think about families doing that kind of stuff?
Greg, you want to start?
From my standpoint, again, it goes back to every family's situation is different. For some families, that may not be a bad option. But unless you know the individual family's circumstances, you can't judge that. And so that's where they need to work with their financial advisor closely and compare and choose. If that's the best option for them and that's the lowest cost option, that may be the best choice.
Really?
So, it's not just the rate or the cost. There's obviously different tax implications as well, right? When you, and without giving any tax advice, when you have a student that, for example, takes a student loan, that's interest that they could potentially write off, right? So the source of some of that financing has different tax implications. So therein lies why it's so important to really partner with an accountant or an advisor or someone at your local bank to help kind of lay out those options for you, because to Craig's point, that really may be the best option.
So that brings me to another point then. A lot of families don't even have financial advisors. What does someone do to find a financial advisor? Do they go to their local bank? Is that what they do?
Yeah, absolutely.
It works for us.
Sure.
Because that's what the frontline bankers are trained to do, is to give them the advice they need to get started.
Okay. And it's just different accounts that they can open and that kind of stuff that they'll give them as an understanding.
Yeah, and what we find, the accounts, Anthony, are pretty straightforward, right? When you're thinking about a checking account or a savings account, for the most part, they're going to follow the basic, features as any other checking account. What makes Wells Fargo special, or what makes going into a bank special, is that our bankers are trained to really assess not only the need of the customers, but of course where that customer is in their life stage, right? And based on what those needs would be, then we have partners in the bank that specialize in specific areas, whether it's retirement planning, education finance. We have the team members that are able to identify that very well. So to your point, really helping the customers know what their options are, it really starts with coming in, having a banker that you can trust and work closely with, and then from there, depending on how your needs change throughout life, working with the bank because we have 83 different lines of business that can really support you through different stages of your life. Yeah.
So now, I always also hear a lot about grandparents giving a lot of the money to their grandsons, their granddaughters. Is that beneficial for them to do those kind of things?
For the grandparent or
Yeah.
the student? It's obviously beneficial for the student.
Students always happy because
exactly.
They get money.
It's money, and they have to borrow less in most cases, so it's definitely beneficial for the student. You'd probably speak better to the implications for the grandparent. It's something that's become more and more common And so, it contributes to the success in the future when the college bill does come around.
Yeah.
So on our side,
Yeah, I would agree. And really, what's important here is really having that tax advice, right?
Yeah.
What we do not provide, however, is tax advice. We
Yeah.
provide, banking. When it comes to some of the tax benefits, yes, there are benefits that are out there. The best thing I could suggest, Anthony, would be for anyone who is looking along those lines, again, strategically or planning ahead, would be to consult with a local accountant,
Good.
right? To really map and plan that out.
Good.
Yeah.
So we're coming to the end of our show, and usually I ask my guests, what advice do you want to give to the families out there that their sons and daughters are trying to save for college? What advice would you like to give? You want to start it off?
Yeah, I think a lot of the theme what we're hearing right now is discipline, early start. It's not as bad as we might think, as you might think. I have 2 children. I'm the youngest of 3 children that have student loans, right? So, and one thing that my father was very, very clear on is really understanding where you're borrowing, where every dollar of what you're borrowing and how it's going to impact you for the rest of your life. And that's something that our family instilled in us very early, because it's in those large numbers where you can perhaps you can overlook some important details that can have major impact on you. Credit being one of them. So if there's one piece of advice I could give, it'd be very transparent about what you do or don't know. Learn it and know what your options are, because the earlier you have an understanding of that, the better likely you're going to avoid some of those pitfalls. Yep.
Right. Correct?
again, start early, put a plan together, review it annually. You know, it's something that you don't get surprised then, and you know what you're going to be obligated to once you get to college.
Right.
So without the surprise, you can plan for the unknown, and then when it comes, it's no longer unknown.
Well, thank you very much for coming. I appreciate it.
Thanks for having us.
Yeah, thank you.
No problem. So you've been watching The Secrets of College Planning. I'm your host, Anthony Uva. Until next time.